I'm giving you the answers for the questions, friends. I'm giving you the answers. Okay, we'll go to the answers directly. Almost all of you got this right now. Almost all of you got this right. Okay, for sixth question, seventh question, some of you were doing the mistake of not giving 35%. Conceptually, you are not doing the mistake. That part is very shame. Yeah, but yeah.
சார் அப்போ ஸ்டேட் கவர்மெண்ட் தான் இந்த பெர்சன்டேஜ்லாம் ஃபிக்ஸ் பண்ணுவாங்களா சார்?
இல்லை 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 national law. Income tax law is a union law, not state law. ஸ்டேட் லாவா இருந்ததுன்னா நம்ம நேஷனல் லெவல்ல ஒரு சப்ஜெக்டை படிக்க முடியாது. So first year 914, 994, 1337, 270. Second is 36, 59, 500 and 25, 25, 525. Your theory notebook. To your theory notebook, please. Concept of proportionate depreciation. Concept of proportionate depreciation. So just now in the morning you were shouting at the top of your voice saying there is no proportionate depreciation under tax law, and suddenly we see you writing that concept of proportionate depreciation. After break I'm not changing and all, don't worry. Okay, I still hold myself that there is no concept of proportionate depreciation computation in law. In income tax law, if it is used for 180 days or more, claim entire amount as depreciation. Less than 180 days, claim half of the eligible depreciation. That is no change in that. No change in that, my dear friends. I stand with that. Okay. I stand with that. Now, then why am I writing concept of proportionate depreciation? This is not computation of depreciation. This is distribution of depreciation. Okay? Where two entities needs to claim depreciation for the same asset. Where two entities need to claim depreciation for the same asset. Two entities needs to claim depreciation for the same asset. Then this concept will apply. Depreciation will be computed ignoring the event. Depreciation will be computed ignoring the event. Such computed depreciation will be distributed to both entities Such computed depreciation will be distributed to both entities on proportionate basis, that is period of their effective usage. Such computed depreciation will be distributed between both entities on proportionate basis, nothing but period of effective usage. This concept is applicable in the case of amalgamation, demerger, and conversion of entities. This concept is applicable in the case of amalgamation, demerger, and conversion of entities. Somebody is calling. I'll just. So amalgamation. X limited merges with Y limited. So what will happen? All assets of X limited will become the assets of Y limited. All assets of X limited will become the assets of Y limited. This is known as amalgamation, and this has happened during the year. Then what should happen is depreciation till the date of amalgamation X limited can claim. After amalgamation Y limited can claim. A firm is converted into a partnership firm is converted into a company during the course of the year. Then up to a particular point of time, firm should claim. Beyond that, company should claim. So, where two entities need to claim depreciation for the same asset, this concept will apply. Depreciation will be computed ignoring whatever may be the event. It can be amalgamation, conversion, demerger, whatever may be the event. And such computed now even now I am saying for computing depreciation, the proportionate depreciation concept is not working. More than 180 days, less than 180 days. You will compute the depreciation. Such computed depreciation will be distributed only on proportionate. So computation format will not change, will never change under income tax law. Only computed depreciation is distributed among both the entities on a proportionate basis, that is period of usage.
சார் இப்போ மார்னிங் காலேஜ் ஈவினிங் காலேஜ்லாம் ஒரே பெஞ்சை யூஸ் பண்ணிக்கிறாங்கல்ல சார், அப்போ அவங்களும் இந்த மாதிரி ப்ரொபோஷனேட்
என்டிட்டி ரெண்டு என்டிட்டி இல்லையே, சேம் என்டிட்டி. நோ
இல்லையே. மார்னிங் காலேஜ் வந்து கவர்மெண்ட் இது மாதிரி இருக்கும், ஈவினிங் காலேஜ் வந்து
fees தான் கவர்மெண்ட். இது fees will be collected as per government quota. Morning நாலும் evening நாலும் it's known as Vivekananda College, DG Vaishnava College. மார்னிங்கே வந்து நடத்திட்டு அது ஈவினிங்னு சொன்னா அதுக்கு பேர் எம்ஓபி காலேஜ். அந்த மாதிரி நிறைய இருக்கு.
ஓகே
okay so basically if it is two entities in the three circumstances, the amalgamation, demerger, conversion of entities. A Limited amalgamated with D Limited. The entire process was completed on 17th December 2019. A Limited had building whose written down value was 71,60,000. Additional work that took place between July and September, 18 lakhs. Compute the depreciation that can be claimed by A and D Limited. Read through. Building is 10%, my dear friends. Building is 10%. So while computing, I will ignore that such an event happened. Opening WDV 71,60,000. Addition put to use for 180 days or more. Okay, because it's between July and September, 18 lakhs. So there is no, after 180, there is no deletion. Balance available for depreciation less depreciation at the rate of 10%. Closing WDV. Okay, closing WDV. Now, the total depreciation is 8,96,000. A Limited amalgamated with D Limited and the entire process was completed on 17th December. Now, D Limited, friends, is existing like this. In December, 15 days, that is up to 16th, it is A Limited. From 17th, it is D Limited, 15, plus Jan 31, plus Feb 29, plus March 31. Repeating, in December 17th, it amalgamated. Up to 16th, it belongs to A Limited. From 17th, so 31 minus 16 makes it 15 days. Plus 31 days of January, plus 29 days of Feb, plus 31 days of March makes it 106 days. So depreciation will be, okay, 8,96,000 into 106. divided by 366 days, divided by 366, D Limited will claim 2,59,497 and A Limited will claim, okay, A Limited will claim the balance. This is what each party will claim. When I computed the depreciation, I ignored, I never even worry about amalgamation. Post computation, I distribute between the entities based upon their effective usage of asset. So, which is delimited 106 days, balance date for A limited.
Sorry.
Go ahead with your question.
So in case if it is less than 180 days, then how we will compute it?
You compute the depreciation. When you compute the depreciation, 71 lakh 60,000 into 10% plus 18 lakh into 5%.
Yeah, but by proportionating it between two companies, here we have taken as 106 divided by 366. There, how we will take it?
It's the same.
366.
Yeah. Compute the depreciation ignoring the event. Such computed, how many days D limited is existing, A limited is existing. That's what you have to say.
Sir,
Go
So
ahead.
1 minute to keep the answer.
so what if the capital expenditure was incurred after amalgamation?
Only for, then it is not for both the companies. Only the other company will claim. If the capital expenditure is incurred by D limited alone, the question itself is where two entities need to claim for the same asset. In that case, two entities will not claim for the same asset. Whichever entity is claiming, they can take it in full.
The opening, but the depreciation and opening WDV should be
Definitely
proportional.
bifurcated. Depreciation on opening WDV will be computed separately. That is, in other words, whatever assets both the entities have used, that will be computed separately. Whatever asset one entity alone is using, that alone will be computed separately. Add it up. That's all. Concept of unabsorbed depreciation. Concept of unabsorbed depreciation. Concept of unabsorbed depreciation. I know you are in your theory notebook. Okay. Just two lines for a T-shaped P&L account. Just two lines. Only for two lines, a T-shaped P&L account. For ease of understanding, I'm saying. A T-shaped P&L account, just 2-3 lines covering. On the credit side, by gross profit 6 lakhs. by gross profit 6 lakhs. On the debit side, to operational expenses 4 lakhs. To operational expenses 4 lakhs. To depreciation 3 lakhs. To depreciation 3 lakhs. Now again on the credit side, by net loss 1 lakh. By net loss 1 lakh. By net loss 1 lakh. Was there a profit before depreciation? Was there a profit before charging depreciation, my dear friends? Was there a profit?
Yes, sir.
Yes, 2 lakhs you had profit. Your depreciation came to 3 lakhs. So the loss is where the profits are not sufficient, where the profits before charging depreciation are not sufficient to cover the whole of the depreciation, where the profits before charging depreciation are not sufficient to cover the whole of depreciation, then the uncovered portion of depreciation is known as unabsorbed depreciation. Is known as unabsorbed depreciation. So that 1 lakh by net loss you have put, round it off and put an arrow mark somewhere where you can write, wherever you can take it. Under income tax law, this will be known as unabsorbed depreciation. Under income tax law, this will be known as unabsorbed depreciation. So what is unabsorbed depreciation? Where the profits before charging depreciation is not sufficient to cover the whole of depreciation, then the uncovered portion is popularly known as unabsorbed depreciation. The uncovered portion is known as unabsorbed. Depreciation for electricity companies. Depreciation for electricity companies, generation of power, that's what. These entities has the option of following either diminishing balance method or straight line method. These entities has the option of following either diminishing balance. They can this only option is for electricity companies. All others will only follow diminishing balance method. Electricity company alone has the option of either following diminishing balance method or following straight line method. Where diminishing balance is opted, then block of asset concept. Where diminishing balance method is opted, then you will compute depreciation using block of asset method. Where SLM, straight line method is opted, then asset has to be depreciated individually. So there is no group of asset or block of asset concept. Every asset has to be depreciated individually. Where straight line method is opted, then every asset, my dear friends, has to be depreciated individually. There is no group of asset concept. In the year of sale, in the year of sale, following is the accounting treatment. In the year of sales, how to record? If sale value is less than book value, that is the written down value. Okay, if sale value is less than book value, then the difference will be treated as terminal depreciation. If the sale value is less than the book value, sale value is 10 lakh, book value is 12 lakh, 2 lakh will be charged off as last. No more, it's going to be there. Terminal depreciation. Terminal means last. So that 2 lakhs will become terminal depreciation. If sale value is more than book value, then the difference will be treated as balancing charge. If the sale value is more than book value, then the difference will be treated income. Okay, then the income, we don't call it as profit on sale of asset. I told you no such concept. So balancing charge. If the sale value is more than original cost of the asset, if the sale value is more than the original cost of my purchase, difference between sale value and original cost capital gains, it will be known as capital gains. Difference between original cost and book value, balancing charge. Please read through patiently and try to answer the 9th question in the material itself. This is not at all a popular concept. I have never seen a question. Okay, just read through once and answer it in the material itself. Send that person and come back. So it's a simple concept, seemingly long theory. Electricity company adopting straight line method of depreciation. Actual cost of the asset 5 lakh. Written down value now 450. That is the book value. What will be the treatment if the asset is sold for 350? 1 lakh will be terminal depreciation. 1 lakh will be terminal depreciation. What will be the treatment if the asset is sold for 480? 30,000 balancing charge. 30,000 will become balancing charge. What will be the treatment if the asset is sold for 6 lakhs? Okay. 1 lakh is equal to capital gains. 50,000 is the balancing charge. See, 450 is the book value. You sold for 6 lakhs. 150 is the profit. But you are taxing it in two ways. Over and above the original cost, 1 lakh will be considered as capital gains, and this difference between original cost and book value 50,000 will be differently treated.
சார் என்ன சார் யூஸ் இந்த மாதிரி கேட்டகரைஸ் பண்றதுல டெர்மினல் டெப்ரிசியேஷன்
Terminal depreciation is these are all jargons. It's an expenditure. 450, but whereas it's loss on sale of asset, profit on sale of asset is not a concept, so they use a different jargon. That's all. No big use. And I tell you, none of the electricity companies value it on return on wages. I mean, straight line basis. Everybody go for what is known as return on, because if you don't go by return down value method or block of asset method, you will not get additional depreciation. So who will opt for straight line method? And the rates will be very less. If return down value the rate is 15%, straight line method it will be 3% or 5%. So nobody will go for straight line method. Just the bookish concept. The last part of the discussion of depreciation is something slightly away from depreciation but related. Section 32AD, investment allowance. We call it as investment allowance. Section 32AD, though it is like depreciation, but the name given for that is investment allowance. Available only for manufacturing entities. Available only for manufacturing entities located in the notified areas of the state of Bihar, West Bengal, Andhra Pradesh and Telangana. Available only for manufacturing entities located in the notified areas of Bihar, West Bengal, okay, Andhra Pradesh and Telangana. We already know they enjoy a depreciation at the rate, additional depreciation at the rate of 35%. Apart from that, they are going to get investment allowance. Available only for new plant and machinery. Available only for new plant and machinery purchased during the year. Such plant and machinery should be used for manufacturing operations either directly or indirectly. such available only for new plant and machinery purchased during the year, and it should be used for manufacturing operations either directly or indirectly. It should be used for manufacturing operation.
Sir,
Taken?
generally machineries will be used only for manufacturing purpose.
Yes.
Why
Yes.
do they mention it that it should be for manufacturing operations?
Because an air conditioner is also a machinery under income tax law. Yeah, a fan is also used as machinery under income tax law. Some vehicles are known as machinery, so those they might not have been used in the manufacturing process. That's why they are saying so. Rate of depreciation, sorry, rate of investment allowance, 15% of cost of machine. 15% of cost of machinery. Rate of investment allowance 15. 15% of cost of machinery. Rate of investment allowance 15% of cost of machinery. My dear friends, two things. One, there is nothing called 7.5%. There is nothing called more than 180, less than 180. It is even if you buy and use it from March 31st, you will get 15% of cost of machinery. That is the biggest advantage here. Okay, no need to bifurcate. No need to say 180 days or more or less than 180 days. So 15% you can claim. And the second biggest advantage is investment allowance need not be reduced from the block. Investment allowance need not be reduced from the block. It will not be reduced from the block at all. Investment allowance need not be reduced from the block. Okay, investment allowance will be separately claimed. Less normal depreciation, additional depreciation, investment allowance, less normal depreciation, additional depreciation, closing WDV. That's all. That will become the next year's opening WDV. Investment can be separately claimed. Again, to promote that area, if you look at it, it's a big thing the government gave. That is, they can claim normal 15 plus additional 35 plus investment 15. Okay, in the first year itself, they will be able to claim 65% as deduction. In the first year itself, they will be able to claim 65% as deduction. But still, those areas did not have major manufacturing activity.
Sir, I have a doubt.
Yes, friend.
Sir, if there is losses in enterprise like gross loss, even then unabsorbed depreciation comes into place.
Yes.
Okay.
Bharti,
Yes, sir.
suppose in case you are unable to write it in November because of that eligibility criteria, and you are writing only in May, Bharti. Okay,
Yes.
both investment allowance and the special additional depreciation are not available. It's with 31st March 20, it's over. For students who are going to write May 21, this is not there. That 35% is also not there. This 15% is also just for your knowledge purpose.
So it has been scrapped now.
Yes, correct. you
Sir,
stop
for
it?
furniture it will come or not, sir?
No, it will not. Sir, can we stop with depreciation and investment allowance because we have to prepare for mock test? Wait. Am I clear to you? Okay. Question number 12. Question number 12. B Limited, a company engaged in manufacture of sports equipment, so manufacture, located in the notified area of the specific state, furnishes the following particulars pertaining to 1920 and 2021. Compute the depreciation as well as investment allowance for 1920 and 2021. Also compute the written down values. Fine. Okay. Opening WDV on 1st April 19, 25 crores. Sold plant and machinery on 20th May 19. Purchased second-hand machinery. Take a highlighter and underline this word second-hand machinery. You will not get additional depreciation or investment allowance for this. You will not get additional depreciation or investment allowance for this. Reason being, it is a second-hand machinery and these are available only for new asset. You will get normal depreciation, no doubt about it, but no additional or investment allowance. Acquired and installed a new plant and machinery 15% block on 31st July and 31st October, 30 crores. This is up to 1920. In 2021, he is buying additional plant and machinery 26 crores. For a minute, forget investment allowance. Do normal and additional depreciation in crores. Take 2 digits alone, that is 5.12, like that. Okay. So take 2 digits alone for the answer, not more than that. In crores itself, you can work out. Do the normal additional depreciation for both years. Remember, this is year 2 because it is 2nd April 2020. So this will be coming in 2021, 1920, and here onwards 2021. Go ahead, try it out. You need not send me the answer, just work it out and keep, I will check. Are we getting these answers?
Sir, you told for financial year 2021, no additional depreciation.
No, that's because that was only for Bharti, not for you.
Okay.
If you are writing in November, no, if they ask this question, please answer like this. Okay, because that is not applicable for your examination. As far as your examination is concerned, you can continue to enjoy it.
So can you show below?
Up to this, are you clear?
What, sir?
Up to this, are you clear? Is your normal coming to 8.7 year 1, 10.73 year 2? and additional 8.75 and 10.85.
Could you explain additional depreciation for first year?
First year, my additional depreciation will be for the first more than 180 days, 180 days or more. I will not claim it for 12 lakhs, 12 crores, because it is a second hand machinery. 20 crores into 35%, 10 crores into 17.5%. That's how I get this 8.75.
Okay, sir.
Sir, can you explain the depreciation part for both the cases?
Depreciate, yes, I can explain this. Opening WDV 25. Addition consists of more than 180, 12 plus 20, 32. Out of this, 12 is old machine, 20 is new. Sale consideration minus 4. So 63 crores. Normal depreciation. Okay, I can work out for you again. Okay. 10 into 7.5% plus 63 minus 10 into 15%. 63 minus 10 into 50, sorry. Yeah, 63 minus 10 into 15%. Into 15%. This is how we work for normal depreciation. Additional depreciation is only for the addition made, that too only for new plant and machinery. That too the rate is 35% since it is in the notified areas. So I get, okay, 20 into 35% plus 10 into 17.5%. Using that, I take the opening balance, work out in the same manner. Here my additional depreciation will be 26 into 35% plus last year 10 into remaining 17.5%.
So for the first year, it is
Okay, sir.
8.7 only.
Once more?
For the first year, normal depreciation is 8.7.
Yeah, got your point. I rounded off to the nearest rupee, but it should be 2-digit. Okay. Now, additional depreciation. Now investment allowance. Again, 20 plus 10 into 15%. 20 crores in year 1, 10 crores in, 20 crores and new machine purchased in the first half, 10 crores new machine purchased in the second half into 15%, directly 4.5. Here it is. So here there is no bifurcation of more than 180, less than 180, and it need not be reduced from the block.
So second year additional depreciation is 10.85.
26 into 35% plus 10 into 17. Last year I claimed only half of the eligible depreciation. The remaining half I will claim this year. So 10 into 17.5%. I hope this is clear. It's a rare question. Very, very rare, but remember if it is given.
So 1 minute, show the answer part, no? Okay, sir.
So investment allowance is on the closing WDV.
No, on the asset purchased during the year.
Only
New
on the
asset.
okay.
Let's finish the two more questions in the class itself so that we are not hurry, we are not leaving anything without doing. Question number 11. Abhimanyu engaged in the business of generation and distribution of power, that is also manufacture, opts to claim the on return down value method, which means he can block off asset and he will have additional depreciation. From the following details, compute the depreciation as per the provision. Opening WDV, new machinery purchased on 12/10, machinery imported from Colombo on 12/4. Okay, the machine has been used only in Colombo earlier and the assessee is the first user in India, so he will get the additional depreciation. If somebody else has used it outside India, new for our purposes only we can see. We can see it is new for our purposes, so you'll get the additional. New computers engaged in generation, so clearly it's in manufacture. Okay, okay, two. Okay, all rupees should be in lakhs, my dear friend. I think all rupees are in lakhs. Take it as lakhs and work out. For computer, 40%. For computer, 40%, and it is used. Okay, both the machines are new machines. Both the machines are new machine. The machine has been used only in Colombo earlier, and the assessee is the first user. That itself is a proof that it is a new machine. That it is a new machine. Okay, try it out.
We understand that as if second-hand machinery purchased out of India, it will be treated as new machinery.
Yes, you can understand it so. Though it is a second-hand machinery, for the purpose of Indian income tax law, this is only a new machinery.
So generation means this manufacturing.
Generation means manufacturing. Yeah. What's your answers?
8.4, 2.8,
0.8.
0.4 for additional, sir. Computer.
Yeah. And I have worked it in absolute values. So accordingly, you can check. I have worked out in absolute values. I hope it's clear to you. 8.4, 2.8, 0.8, and 0.4.
Sir, how did you get 2,80,000?
How do I get?
2,80,000 additional depreciation of
99 lakhs into 20% plus 10 lakhs into 10%. This is not a special state, not 35%. It is only 20 and 10. Okay. We'll stop here, friends. I have some friends who I want some house property chaptered out. We'll stop here, okay? And the rest from section 33, we are going to continue on Tuesday morning. Tuesday morning, we will complete 33, 35, major part of 35. By this weekend, that is by next Sunday, we should be able to come closer to completion of this particular chapter, or subsequent Tuesday, we will be there. We will learn it in a clean fashion that we don't get confused. Meet you on Tuesday. Those who have doubt on house property alone, please wait. Please wait. I'll join you. Okay, just wait. I'll stop the recordings and come. Others, I'll meet you on Tuesday morning. Please wait, others.